Welcome to Crescat's live market call featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please refer to our important disclosures pages on the screen now. These can also be found in the description on Crescat's YouTube channel and on our website. Crescat's live market call is about sharing timely macro and newsworthy geologic updates, both the positive and the negative news across our holdings as they arise. These videos represent the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress of our activist strategy in creating new economic metal deposits in viable mining jurisdictions around the world. The securities discussed herein do not represent an entire portfolio, and in aggregate may only represent a small percentage of a strategy's holdings. The issuers discussed may or may not be held in Crescat's client portfolios at any given time and may not be appropriate for all investors. The video is not intended to be, nor should it be construed as an offer to sell or a solicitation of an offer to buy any security. Sorry, not to buy any securities, services of Crescat or Crescat funds. If you enjoy our videos, please click on the like button and make sure you're subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on Twitter for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to Merrick Iwahashi. His contact information is on the screen and can also be found on our website at crescat.net. So today, format's going to be a little bit different. Tavi has just been the primary author of a new paper that we have that he has titled The History of the U.S. Dollar Cycles. And he's going to be giving us kind of a preview walkthrough of some of the key charts and data in that letter. We're probably going to be publishing our latest research letter tomorrow morning, so stay tuned for that as well. Quinton is in Sweden and has pre-recorded his segment, which he pre-recorded last night, and so it's pretty fresh. He's got a number of updates and some other market-oriented and geologic, scientific surprises for you. So, so first, let's start with Tavi, and we'll go from there.
Sounds good. Thank you, Kevin. We're happy to start the presentation here. Then we'll listen from Quinton. We just finished a deep work that we've done here, profound analysis regarding the U.S. dollar, and that I would like to share. It's going to be a letter, as Kevin mentioned, will be going out this weekend, that you can read it more in depth in general. And this is just a chart that we're stepping back and looking at. It reminds me a lot of that commodities to equity ratio chart that we've had a while ago. And you can see clearly when you step back and do a 10-year rolling change of the DXY index. The DXY index is just a weighted basket of currencies, mostly actually on the euro, and then there's British pound and also the yen and some other currencies, but mostly euro actually. And it gives us a sense of how the dollar trades versus other fiat currencies. Obviously, before the 90s, the euro did not exist, so the basket was different. So the basket has changed over time. But you can see when you step back and look at a 10-year rolling change, or a 10-year performance of the dollar, of the DXY index, you have this sort of profound changes or cycles throughout history. Some of them when markets are, when the DXY is really low in terms of performance and at that 30% decline, as you can see in the chart, we've seen periods where the U.S. equities were very undervalued. When we see periods where the dollar is rising and sucking all the capital from the rest of the world, and the capital is coming into the U.S. and also feeding not only the U.S. dollar, but also the U.S. equities and treasury markets, we tend to see a bullish environment that kind of peaks when we see a speculative environment or a bubble or some sort of period like that. The Plaza Accord of 1985 was a little bit of a different time, was really the dollar and the treasury market were the ones really sucking all the momentum of that time in history. The tech bubble was a period where obviously not only the treasury market, but really the equity market was the asset class that kind of sucked most of the capital. I would say that today has been really the equity market is first and foremost the asset class that has benefited the most from this dollar cycle that we've had. In our view, we're kind of reaching a pivotal moment in the U.S. dollar. And in terms of its major turning points that it could have, and in our view, that's going to be unleashing a lot of different macro opportunities. So let's go through some of them in the next chart. In this next chart, I'm showing the same as the prior, so the DXY, but now I'm overlaying another chart, which is the relative performance of U.S. equities versus the rest of the world. And what is remarkable about this chart is the correlation, 0.83. So yeah, you can get this changes in the dollar versus that relative performance of the equity markets in the U.S. versus the rest of the world can be different on a weekly basis, can be different on a daily basis. But when you do a 10-year rolling correlation of these two lines, clearly they are very they move very closely to each other, and it makes sense. If the dollar is gaining momentum, if it's attracting capital from foreign investors and domestic investors and from central banks and all sorts of institutions are actually deploying capital in US dollar, you would expect that the US equities would perform better than the rest of the world. Now, what I think is the fallacy and maybe the issue in today's markets is the fact that everybody thinks that those trends never end. And it's not true. Throughout history, those trends, they change over time. The market evolves, leadership evolves. In the early 2000s, during the tech bust, the leadership was changing. So the tech bust happened, the US markets kind of lost the momentum, and the rest of the world actually took on the leadership for the next decade or so. It feels like today, a movement like that or a transition like that sometimes feels almost unthinkable. And I think that that's precisely when you have to be paying attention to a pivotal moment. And there's many things that I think will actually be unleashing this trend. But first and foremost, if we go to the next chart, I guess I can cover more of that. The U.S. exceptionalism is sort of a way of that people talk about, but really is it really U.S. American exceptionalism or just fiscal irresponsibility in general, or just reckless spending from the government here in the U.S.? This is just looking at today's fiscal spending versus other countries. You can do the same chart looking at the average of the last 5 years. You can do the last 10 years. You can do since the global financial crisis. You can pick your period here. Since the global financial crisis, pretty much any period you pick or any window you pick, you're going to see that the U.S. has drastically been spending much more than other economies in the rest of the world. Now, that has been maybe the case because we meaning America, the U.S., holds the title for the reserve currency. Maybe that's one of the reasons why we tend to see this American exceptionalism and this enabling them to spend more than other economies, enabling them to be less disciplinary than other economies. But the big question that investors should be asking themselves is this sustainable? Just a couple months ago, talking about cutting government spending was again unthinkable. It was just a total contrarian opinion to say that we could see government spend, but the path we're in is clearly unsustainable. Now we're starting to see the conversation change to the Doge idea and all sorts of different efforts from the new leadership in the government to cut government spending in a large way. And if we're going to see that, it begs the question, can we continue to see American exceptionalism if we're going to see less fiscal responsibility? And I would actually argue very strongly that that's going to make a big change and a huge impact in financial markets as we move forward. Let's go to the next chart. Because the dollar change basically, or the dollar cycles and those pivotal moments are usually caused by two things. If you look at throughout history, two things are very important and especially when the dollar starts rallying. So what are those two things? The dollar tends to enjoy two things in particular: government spending aggressively and fiscal tightening. Now, what has been proposed by the new leadership, and what's been not only proposed, but really, when you think about being cornered, right? And I'll call this the danger zone in this chart. What is this chart? You're looking at a plot of many countries, largest economies in the world. And you're looking at one side, you have interest payment on the debt. And the other side, you have how much the government is spending, the deficit. And so if you go more to the left, you see more extreme deficits. If you go more upward, you see more extreme debt cost. And the U.S. is the only economy in this chart that is actually in this corner, as you can see, what I call the danger zone. Well, doesn't matter what leadership will be, and this is the key for having a solid macro thesis, in my view, is it doesn't matter what political leadership is going to be, although we know which one is going to be. It doesn't really matter, because the U.S. is cornered into a place where it has to essentially start either doing one, which is suppressing interest rates to reduce the interest payment on the debt, or be more responsible fiscally and reducing fiscal spending. So if you know that aggressive fiscal spending and monetary tightening causes the dollar to rise, what does that do if we see the opposite of that? What does that do if we see monetary loosening or suppression of interest rates along with a more disciplinary approach from the government? Well, that probably will create the pivotal turning point for the dollar, in my view. And this is why I'm paying close attention to Scott Bessent's recent commentaries, the new Treasury Secretary. We're paying close attention to all sorts of commentaries that are regarding what policies may take place in the next few years. And one of the things that have been said, which I think it's also important, from Scott Bessent's interview not too long ago, I think a few weeks ago, he said that the Trump appreciates not only a weaker dollar, but also the fact that we need to keep or reserve currency status. And then after that comment, what he said is, I want to make sure that people understand that those two things are not mutually exclusive. Well, pay attention to that. What he's saying is essentially is that policy will probably, and this is my view, be driven on weakening the dollar, but also maintaining this reserve status at the same time, which is doable. And so I think this corner, this danger zone we're in, and as we see the U.S. dot moving back to where other countries are, I think the cost of moving that dot back to other countries equals the dollar weakening in a large way. And so what are the things that you should be paying attention to if the dollar is going weak, 5 to 10 years from now? Well, I think there's a lot of things. I just showed you the correlation between the dollar versus the relative performance of U.S. markets versus the rest of the world. Well, that's really interesting. Let's go to the next chart. On the next chart, you're seeing the valuation of the rest of the world versus the U.S. This is just a traditional price to book aggregate calculation of the S&P 500 versus all sorts of other indices across the globe. And you can see that the rest of the world is very cheap or very undervalued relative to the U.S. And, this is a function of the dollar strengthening, or the dollar curve that we've seen, or the dollar movement we've had over the last decade or so. But really, maybe this is one of the most extreme differentials of valuations of the U.S. versus the rest of the world that we've seen in history. And not only that, it's actually kind of intriguing to see people talk about, because of the new leadership, that we're going to be facing a world of American exceptionalism coming back. Wait a minute. That has been happening for the last decade or more. I mean, we haven't seen anything like this in, like I said, probably in history. And so I think that there's a much bigger chance or probability that capital may actually start flowing out of the U.S. and into these other places than the other way around. I mean, I think we've seen that pendulum swing way too far to the U.S., and it's time to see that money start coming back to the rest of the world. Let's go to the next chart. So the next chart is just doing one example. You can see the MSCI World weights per country, which is weighting the U.S. in about 73%. You can see the rest of the world. So basically, the U.S. is sucking all the dollars from the rest of the world clearly on one index. Index are not running necessarily money, but a lot of other vehicles, investment vehicles, actually use MSCI weights to deploy capital. So this is an important a way of analyzing how things have been concentrated so much in the U.S. versus other parts. My view is that we're going to see a change in this. And keep in mind, the U.S. economy itself is about 30% of the overall economy, of the global economy today. And we're giving a 73% weight on the MSCI world for U.S. equities versus other countries. And so, those things put into perspective how we've gone too extreme on the flows of U.S. markets in general. Let's go to the next chart. Now you're seeing something that I pointed out recently on Twitter, which is periods of similar extreme rallies in the U.S. dollar. I was having dinner with Peter Crow, and Ronnie Sterfole from Increment and AG, and we were talking about the dollar, and I wanted to share with them this view about the dollar, and I've been trying to share this with a few smart guys to kind of poke holes in this thesis that we've been working on for the last few months. We've been, I think, very open to the idea that the dollar has always been the cleanest of all dirty shirts, and then all of a sudden, after doing all these research, especially regarding the interest payment to GDP, I think this to me was eye-opening. I personally have changed my view completely. I think Kevin too, as well. I think this is a firm view. I would say that the dollar is likely to be turning lower, and now we think that the DXY index is potentially facing some real vulnerabilities, but also challenges moving forward that could cause this index to start actually declining, and will be very critical for different macro trends that will be unleashed that I will talk about in a minute. But you can see in this chart now that since basically the last few weeks, we've seen a very extreme move. So I took literally the bottom of the DXY index to the very peak that we've seen recently. And I looked at, well, how much was that appreciation? Of about 6.5%. And then I took, 70% of those days that the dollar was up or the DXY was up, 70% of the 43 days, actually, the dollar, the DXY was up. And then I wanted to look at throughout history, how many times have we seen this? Well, shockingly, I guess, or surprisingly, the last time we've seen this was when Trump won elections. And after that, the dollar actually moved a lot higher during as soon as he won elections. And once he actually took office, the dollar peaked. And it had basically two bottoms, if you look at the chart. One, it was in 2018, and the second one was in 2020, right at the end of his election. So Trump actually managed to have a very weak dollar during his presidency the last time. And I think it's kind of funny to see Wall Street betting so heavily that this time around will be different, that we're actually going to see a strong dollar. So, I tend to look at history. I tend to look at historical trends and pay close attention to them, especially if they rhyme with today's environment. And I think this is the case today. Let's go to the next chart. So one of those trends that tends to be unleashed by a dollar weakness is emerging markets. And a lot of people are not paying attention to this. Emerging markets have been trading in a upper channel, as you can see in this chart very clearly. And this upper channel where we hit the upper band and we're very overvalued, and then we started to go lower. And by the way, that beginning of that chart was right when we had the Plaza Accord, when we agreed on as a global economy and policymakers, monetary authorities agreed on weakening the dollar, which some folks have been calling this the Mar-a-Lago Accord potentially. And as you can see here in this chart, right after that, emerging markets surge for a long time until they hit a peak in the early 90s or mid 90s. And then we saw the beginning of a decline. A lot of currencies at that time actually crashed. There was the beginning of the Asian currency crisis. We had some other Latin America countries that actually faced some big issues, and that lasted all the way to the very bottom, or a little bit before the bottom of the tech bust, if you recall. And that was the beginning of another trend of the emerging markets economies and equities and currencies and bonds. All those things, all those asset classes did very well during that time. Then we peaked again right at the global financial crisis. And guess what? Since that time, we've been going lower and lower and lower. In fact, we've been consolidating after some major volatility events in the emerging markets index. And now we've been consolidating for over a decade. And in my view, I think we're on the cusp of a beginning of a movement on the upside. And pay attention to some of these markets that have started already to move. India, Argentina, both of those have already starting to break out and make new highs. And in my view, it's a matter of time for others to follow. Now, I want to make one clear aspect here. We're not talking about authoritarian countries like Russia and China. We're talking about resource economies that have very high exposure to commodities that are undervalued today, that are likely to receive capital from other parts of the world because of how cheap they have been relative to the US. I just want to be clear with those differences. Let's go to the next chart. Now, you can see a chart that I tweeted this morning that I think is also remarkable. Now, pay attention to the first panel of this chart. The two lines are in the same index, okay? So for those that like to usually troll or make comments about my charts, this is in the same axis, okay? So you can see that this chart, the blue line, there are times when the S&P 500 appreciates more than emerging markets. And there are times when emerging markets actually outperform the S&P 500. And you can see that by the relative performance in the second panel, which is in green. And in the early 2000s, clearly, this is why when people say, there is no way, or when they use words, Scott Basson actually talks about this. You always pay attention when a manager talks about or uses the word never. Be careful using those words. And this is sort of what I think is happening today when people are just, with this belief that markets will not end this leadership of U.S. markets relative to the rest of the world. And clearly, we are at a very extreme point in history of this relative performance, of which it wouldn't shock me at all if we see more efforts to weaken the dollar through the current next administration. Not only that, but remember that box that we're in the U.S. that has nothing to do with whoever will be leading the country in the next few years, but really the fact that we have political constraints that causes whoever is in place to reduce interest rates and potentially reduce spending. And that's going to eventually, in my view, cause the dollar to weaken substantially and cause this green line, in my view as well, to start rising again. Let's go to the next chart. And you can see that this year alone is on pace to be the worst performance for the rest of the world relative to the US in 25 years. 25 years. So, and by the way, if you look at this chart and you can see that 2023, which is in green, and I know there's all sorts of green colors in this chart, but if you pay attention closely, you'll see that the 2023 is also down. So if you sum up those two numbers, it is by far the biggest decline we've seen in history, 2-year performances. And so I think we're going to see a resurgence of the rest of the world versus the US in a way that, because most investors are completely wrong-footed in terms of positioning. And I think this is going to be a big change in the macro landscape. Let's go to the next chart. Now, the next chart is just looking at the magazine cover curses that we have. Pay attention to that as well. November 21st, 2024. Should investors just give up on U.S. stocks outside of America? No, but it's getting a lot harder to keep the faith. And then they have a bull, an American bull kicking a globe economy in the rest of the world. And I think, by those that don't know, I actually have a collection of newspapers, a collection of magazine covers, because I do think that they have a relevance in markets. And I find it fascinating how we tend to see narratives being created over time that a lot of times are a reflection of what has been happening over the last few years. And we as investors always have to pay attention to what's going to be in the cover 5 years from now. And I would be shocked if the cover will look like the cover you're looking at right now on the screen. I think it's going to look quite the opposite. And so this is why I'm emphasizing magazine covers, because I do think that they have, a reflection of the sentiment that is in the market right now. Let's go to the next chart. I'm almost done, I think. Market cap to GDP. This is a chart I had before. It's just another way to see how expensive things are. You can see the U.S. is about 180. This is Buffett's favorite way to look at the market. And now you can see there are some other economies that look expensive in this metric. This is not the only metric you should be looking at. Look at CAPE ratio too, the cyclically adjusted PE ratio. We're at 38 today, 38.3. That's the same number we had back in the peak of 2021 when interest rates were at 1.5%, and today they're 4%. So how do you justify that? Anyways, this is just another way to point out how expensive, how overvalued U.S. markets are relative to the rest of the world. Let's go to the next chart. Next chart, we're looking at that consolidation. And emerging markets clearly have this throughout history. They have this ripping moment, this surging bull market that they have throughout a long period. And then they go through this very volatile, downward, and painful moment. Sometimes it can take a decade or more. But this period that we've seen now, it's been a very long period, which I think only, potentially explains that what we may see coming out of this, because people have been just losing faith over the rest of the world, over emerging markets, that when this comes back, it will come back, in my view, with a much stronger way. It's kind of like the gold trend, in my view. In fact, I have a surprise for you. Go to the next chart. Gold actually leads emerging markets. Wow. Look at this. I mean, potentially, if you look at the correlation between emerging markets and gold, it's remarkable as well. And gold has been actually making new highs already. And so in my view, this actually means, in my view, that the yellow line, gold, I picked the yellow line for a reason, is leading the blue line in a big way. And when we complain about junior miners and other mining companies that have not received capital, despite the fact we've seen the gold market go up a lot, and we've seen all these other assets lagging substantially versus gold, keep in mind this is not just the junior miners. Emerging markets are also lagging in a substantial way. Throughout history, you would have expected emerging markets to be leading the way along with gold. And in my view, this has something to do. They're all linked. They're all in the same camp. And I do think that the blue line, and the big question is, which one is right? Is gold ahead of itself, or is emerging markets are poised to a major catch up? I think it's the latter. Why? Well, because if you look at central banks and what they have been accumulating of gold, they're the largest buyers of the yellow line. They own historically, back in 1970s and late 70s and early 80s, over 73% of their assets were gold in their balance sheet. Today, it's less than 20%. And we know for a fact, by looking at the World Gold Council, have been reporting that economies have been buying record amounts of gold in the last 5 years. And when we looked at throughout history, well, they're far from where they used to be in the past in terms of relevance of weighting of gold relative to their balance sheet. So I think that this trend is only getting started. And I think that ultimately it does drive the blue line much higher. It ultimately could be very positive for mining companies and others. These are all my opinions. Just want to make sure that that goes first. Let's go to next chart. Okay. If you're of a belief that gold is going to have a move, if you're the belief that emerging markets are cheap, well, that brings me back to silver, which I continue to think it's the most undervalued metal in the planet. And it's remarkable as well to see the white line follows silver miners. Well, that makes sense. Well, they're producing silver. They should follow the line. But guess what's been happening recently? Silver has already broken out of this support line that we've seen all the way back to 2011, when the silver mining stocks have broken out and now have retested, and everyone is losing faith over that. And when the opportunity is right in front of us, in my opinion. And so I think that we're poised to see a movement on the upside for silver miners, along with silver potentially taking out much higher levels. And this is a really exciting moment to be an investor and running a fund that is almost, one of our funds is entirely focused in metals and buying mining companies of what we believe to be high quality assets. And so this to me gets me excited. Let's go to the next chart. I promise I'm almost done. The last chart is this one, because I think this is absolutely critical as we see this new administration come in place, and we think about how Trump potentially could play a role into the energy industry sector, but also the mining industry. This is also a very important and critical aspect. I mean, mining as a percentage of GDP used to be close to 20% of the economy. Today is 0.3%. It begs the question, why? And there's a lot of potential reasons for that. One of that, it has to do with technology. Technology is getting better. It's easier companies are getting more efficient. We're requiring less labor, less infrastructure, and so forth. Okay, that's one thing. But that doesn't cause a number to go from 17 to 0.3%. What caused that is our reliance on importing ore and metals from the rest of the world. And I think that reliance is also on a clock, meaning I do think that Trump will see that as a risk. And Trump and any other political leader, in my view, will see that not only from the U.S. lenses, but from any other country's lenses, that this is a critical aspect and a critical industry that needs to be preserved and needs to be also nourished with new capital and new money in order to secure the metals that we need and the ore that we need to run the global economy. So this is the last part that I wanted to point out, because I think that ultimately, if we do have a bull market and a secular bull market for gold and other metals, I can't imagine that this won't cause capital also to flow into this industry to a degree that we haven't seen in the past. And I feel very, I have a lot of conviction in this thesis, and this is why I wanted to share this chart with you. Anyways, I think this is my last chart. I think we have a presentation from Quinton now to be released, and so let's go on to that.
And once again, pleasure to join everyone once again. I am broadcasting from Stockholm, Sweden this week. I'm actually here for a party for Boliden Mining. They're having their 100th anniversary celebration this week. And I always love Stockholm this time of year. It's bright and cheery. They got the Christmas lights up. Feels like going to Santa's North Pole or something like that. But I will be back on the next broadcast. I do have to do this through a recorded video. So this is being recorded. Oh, it's Thursday evening, North America time. And if for some reason I miss a couple of news releases, it's because of the lag in the recording versus the airing time. All right. Okay, well, look, I'm going to start this week with a little discussion around an inflection point I see in the mining industry right now. We have seen metal prices move up and things like this here recently. And, there's still this kind of melees in the mining space, especially with the juniors, around valuations, money coming in, things like that. But we are starting to see some really key indicators saying that things are turning around, in my view. And they don't necessarily relate to traditional things that people look at, traditional gauges, we'll say. Okay, so I think we're basically, I feel like I have to give at least one chart because Kevin and Tavi do such a good job with their charts. I thought, I gotta have one chart in here. So I put this chart. It's rather basic, I realize, but I'm a geologist, and this is about as much as geologists can handle. But I think we are right there where that green dot is, and we're about to see things move upwards. What do I mean by that? Let's go to the next slide. Okay, a lot of folks, especially investors in mining stocks, they look at things like share price valuations, things like that. I mean, it's pretty simple to gauge the health of the industry. Looking at the amount of money that's being raised by mining companies is also important. Lots of different gauges, but I am actually really interested right now in a few gauges that we'll call say that are out of the norm. Okay, there's in my view, a huge increase in the competition for metals. I'm going to talk about that here in a minute. What the heck is going on? What do I mean by that? I'll tell you. I also see an increased competition for assets. Okay, so that means projects, mainly operating mines, sometimes development projects, but assets in the mining space that are well advanced and can produce metal. But I'm also seeing, along with that, a higher price for mining assets. Okay, so the acquisitions we're seeing these days are moving up in price. We saw some companies here just 4 years ago. Think back to pre-COVID time, and kind of the trajectory we're headed. I would say prior to 2020, and quite frankly, the world was heading into a more of a globalist picture. But I think since COVID, I think we're starting to see that break apart, and I'm starting to see, because of that breakdown, we're starting to see supplier. We're seeing impact from the Chinese. The Chinese have asserted themselves into the commodity space in a big way, and it's not just about buying, ore or whatever from various places. This is a full. What do I mean by that? Well, look at some of the weird things that have happened over the past 6 or 8 months. We're seeing treatment charges for concentrates. These are things like copper concentrates, zinc concentrates that are produced by mines. We're seeing those treatment charges come way down. Why did they happen? Well, the Chinese have quite deliberately built a huge smelter capacity to treat these metal compounds, these ores that are being shipped from mines all over the planet. They're trying to attract those to their smelters. They want to have a larger share of the metal production around the world. And the way they've done it is to build these huge smelters that they basically have to keep full. And the Chinese do not really care about a few pennies here and there on the price of a pound of copper or zinc or something like this. They actually see the importance of having access to those metals and the need for those metals for their industries and manufacturing base. They see that as paramount, and they're willing to pay a pretty healthy price for metals, or they're willing to discount treatment charges. So they've gone around and really been aggressive at pursuing metals. They've done this with a number of metals already. If you look at lithium, for example, they've established complete new supply chains, mainly out of brine lithium and stuff like this. That is just extraordinary. In the past few years, they've basically worked to shift away from maybe mainly hard rock lithium over to brine lithium, and which can produce huge amounts of product. And they've developed their own supply chains now that are completely independent of the West. They've done it with nickel. They've built laterite nickel deposits across places like Indonesia. Huge operations. They're not the most environmentally friendly operations in the world, which is a concern. But the Chinese don't seem too concerned about that. They've moved in the direction of securing their own mines, own operations, and nickel supply chain. And that's in direct competition with the West, which is traditionally sources nickel from its sulfide operations around the world. Okay, so there's two examples. Now, more recently, they've done it with copper and zinc and other metals. Okay, and that's through the smelting capacity. They've overbuilt smelting capacity, and then they've gone around systematically and secure contracts for concentrates out of mines around the planet at very discounted prices. I should say inflated metal prices, but inflated treatment charges, meaning low treatment charges. Okay, so they're willing to go to a mine and say, "Hey, we will buy your concentrates, and instead of the traditional way that the mine has to pay the smelter a treatment charge, we will pay you for shipping your material." So the treatment charges are actually negative, which is just bizarre. Okay, but that's how aggressive the Chinese are at pursuing metals. All right, so I'd say that alone is why I have here increased competition for metals. There's huge reestablishment of supply chains, and the Chinese are directly competing. It's not really just the West; it's with the other Asian countries and stuff too. They're competing with Japanese smelters, with smelters across Southeast Asia and Korea and things like this. Okay, they're also competing for assets. More and more, I'm seeing Chinese be very aggressive to pursue mining assets around the world. Speaking from personal experience, I can tell you that there are many cases where I've seen mines offers made from Chinese banks, Chinese parties to buy mines at premiums. Okay, they're not just going in there and kind of kicking the tires and worried about $1 million or $2 in valuation on the asset. They're not running detailed financial models that get the value of a mine down to a very tight range. They are going in and they're paying a premium. They're offering premiums for assets. Okay, and that's because they want to secure the future production from those mines as much as they do the immediate need for concentrates. Okay, so there is increased competition for assets, hands down. Again, realigning the supply chains for the Chinese versus the rest of the world, more or less. And then we're seeing higher prices as a result. Okay, the price of mining assets has been moving up very quickly in the past few months. If you look back a year or two, there were still pretty good deals to be done. There was not huge competition in the space. Mining assets were kind of going for what we'll call traditional valuations and stuff. We were able to work to secure San Cristobal. Okay, if I would say, could we do that same deal today? No, I would say there would have been a lot more competition, probably driven by the Chinese. Okay, we in the West need to get on the ball and realize this, especially certain politicians who who want to see us competitive. We better get with the program. Why? Go to the next slide. Because right now we are falling flat on our face. I don't think there's very many people that even understand this issue, and it's a concern. Okay, you talk about recent politics. You're hearing a lot about the new round of tariffs that might come in play. You know what? That's one strategy to compete, is to impose tariffs. But believe me, if we don't get on the ball, if we don't start recognizing the issues here, this kind of fundamental, at a base level, reestablishment of the supply chains, we're going to be in a world of hurt. All right. And it's not going to get better. It's going to get more worse. But the West tends to fall on its face before it figures things out and tries to change course. All right. So that's my sermon for today. Let's jump into updates. Go to the next slide, please. Okay, since 2 weeks ago when we had our last video, quite a bit of news has come out. Eloro is back in the saddle. They're drilling away. They've been drilling to infill mainly around the Santa Barbara area, and that's to really bolster that near-surface, higher-grade component of their resource. And it goes back to what I talked about 2 years ago when they first published their resource. The hole spacing was pretty wide in that initial resource. Therefore, when the computer tried to look from one hole to another, it kind of discounted a lot of material in between those holes because there was a huge space. It was an inferred resource. I think the company now is now infilling in between those areas and is really looking to bolster the grade and the quality of the resource. And this first hole that's come out from the recent program is an absolute killer. We're talking about nearly 300 meters, so 289 meters of 66.9 grams silver. That's just silver alone. Okay, that's over 2 ounces, a little over 2 ounces of silver per ton, and then about we'll call it 1.05% zinc lead. Not huge numbers in zinc lead, but in a bulk sense, that's not bad. There's also a bit of tin, as we would expect from Iska, but that silver is a huge number, and I'd say that this kind of infill drilling should have a very positive impact on the upgrading of the subset. Remember, it's a subset they're targeting of this resource area. All right, go to the next slide, please. Just touching on it briefly, look, the drill hole that was announced today is within that red oval that's on the left-hand side there. I believe it's more towards the right hand of that red oval. Basically, it's 68 is, I think, the second from the right. And it's not far from the underground workings at Santa Barbara. Okay, so this is right in the heart of the resource area. A lot of the small dots you see across there, that's historic drilling. I shouldn't say historic, but recent drilling by the company. And these are simply strategically placed holes that are targeting that red area for resource enhancement. And if you look over here on the right-hand side, we can see in cross-sectional view what that means. You can see that drill hole, the one with the long purple tail or intercept in it, that is the hole that was announced. And you can see how that grade down that hole really helps connect the grades that we're seeing in the previous holes on either side. Okay, so having a long interval, very solid interval of mineralization like this can now be put into the computer, and it can be remodeled, and you'll see less, in my view, less of a discount of those areas, those places where there's large gaps between drilling. And you'll see the resource, hopefully see it become higher grade, but also more higher confidence, right? So now they make a point in the news release that this mineralization in the Santa Barbara area appears to be associated with an intrusive breccia. What does that mean? These gray things, these fingers that are sticking up, are basically an intrusion, a magma that's come up and might have been the driver for the mineralizing system. And that, therefore, is closely associated. Almost think of it like a porphyry in a sense. It's closely associated with mineralization we see. If that's the case, you can see there's more to drill here. Look at the map on the left. You can see the gray blob extends further out, and I think it also it plunges more to the south as well. So maybe these guys have kind of figured out the secret sauce here, and through this infill drilling, they can better define the actual geometry and geology that's driving this higher grade system. Anyway, it's a right move. I like to see the company do this drilling. I think it's very necessary, and I'd love to see them upgrade, this core part of the resource area so that they can advance this project forward from here. It's a heck of a good project, very large silver base metal system, and this is the way to do it. Okay, I know money's tight, but this is good work. All right, go to the next slide, please. Snowline is similarly drilling holes to infill in areas at Valley. And this week, just like almost every news release we see out of them, they announced some very long intercepts of stout mineralization, 386 meters, 1.1 gram gold. And within that is 120.5 meters, 2 grams gold. And we're also seeing them step out a little bit on the edges of Valley and infill. Let's take a look at this more. Go to the next slide. You can see the plan view here. It shows the holes that are announced in this news release in a bit darker shades. Notice they have several holes up in the northwest area. I've always liked that area because I think there's a little bit of room. I'm not saying infinite room, but there was some room that was clearly open for growth, and they're seeing that in these holes. And then hole 96, which is collared up in the northeast part of the system there, basically drilled down across and infill that back area on the north side or northeast side. And then hole 94, which is down there more to the southeast, I think that's infilled an important area as well. We're going to take a look at the two cross sections, AA and BB, real quick. Let's go to the next slide. Okay, with these cross sections, they're very illustrative because they show the block model and they show the not PEA, but the resource pit. So the pit that was pulled, and that's how 43101s work. You basically define your block model, and then you pull a whittle pit on that to see what mineralization will potentially fall into a pit. But look at the mineralization outside of the pit as well. They've hit a lot of mineralization, as you can see, well deep in hole 95, for example, even extending downwards from to the right in hole 93. So there's a lot of volume, a lot of blocks that can be added to their block model. How does it affect the pit? I don't know. We'll let engineers figure that out. We're also seeing up at the top of hole 95 a very long interval of mineralization in the yellows that currently is clearly not in the block model, but I think this will quickly change that. I think we'll see a lot of mineralization added to the block model, perhaps even upgraded. Some of the grades in that hole appear to be higher than the block model behind it suggests. So I think we'll see an improvement in the overall resource. And this comes, again, through infill drilling. When the computer has hard data like this, it can go back and it can recalculate the grades for those blocks, and it can give them a better grade often, also more confidence around that as well. All right, let's go to the next slide. Okay, this is section BB. First of all, hole 96 is the key hole in this section. Note that hole 105 is still awaiting assay. In the news release, I think they mentioned there's something like 15,000 meters of drilling left. So we have lots and lots of assays to expect. Here in hole 96, again, we're seeing mineralization pretty much from collar of the hole down to great depth. There's certainly mineralization even beyond the bottom of the current pit, as shown in the previous estimated resource from, I think, March of this year. So we should see an improvement there. Note there's mineralization pretty much down to the bottom of that hole. Kind of makes you wonder what's going on in the bigger picture. I think there's a lot more, interesting geology that's happening at depth that we don't quite understand yet. Is it an immediate priority? Probably not, but I do think there's more story to be told here. But this is a really stout hit, and it shows you that we're going to see an improvement in this resource. Let's go to the next slide. And once again, they've emphasized, which I think is a good thing to do for those who, understand reduced intrusive type gold systems. Most folks know that the metallurgy of the systems can be fantastic. Okay, the gold occurs as particulate gold in these small veinlets in the core. And it's often, freely milling. Okay, so what that means is that when you grind up the rock, the particles of gold liberate relatively easily. And what that means is really good recovery. Okay, it's often associated with bismuth minerals, which are the gray minerals in some of these photographs. Don't worry too much about that. Focus on the gold itself. The gold, in this case, when I see the size of the gold grains and the free nature, they're not really, tightly bound up and other things. That tells me there should be good gravity recovery, but there also should be access by cyanide solution to get even higher recovery, say in a CIL circuit. All right, so this is a really impressive reduced intrusive type system that should have incredibly good metallurgy. The test work that they've done to date indicates that they should see around 95+% recovery in this deposit. All right, let's go to the next slide. Sitka also announced some news this week. They're in the Yukon, like Snowline, and they're in this belt. They're on the hunt for large reduced intrusive type gold deposits. So this whole concept that Yukon might host a big district of these it's not a new idea. It's been around for years, but I think really in the recent years, especially with the excitement around Valley, we're starting to see more and more effort poured into these and good work being done. Now, in the case of Sitka here, they talked mainly about some new reduced intrusive targets they've identified on their property. Got some good surface samples, but I want to talk about this because I think, let's go to the next slide, that we have an interesting situation here. We might have two, we'll call it, reduced intrusive systems kind of tucked right next to each other, which is really intriguing. Why do I say that? Is because I've looked at the texture of the photographs, of rock core, drill core mainly, to look at the intrusive and its kind of its nature in, the blackjack deposit, in this recent Roscabel drilling and stuff. And it seems that the area on the left hand side here around Clear Creek seems to be kind of its own flavor of intrusive. Whereas this new area, or these new areas that they've highlighted in this news release, which are over on the right, they have different texture and stuff. They just look like a different intrusion. So what am I trying to say? I'll go to the next slide. Look, I think we got a twofer. Okay, I think basically there's two magmatic blobs that are sitting. Maybe they evolved at the same time, but they've just simply differentiated. I don't know. But you basically have two magmatic systems that are driving, sending up these intrusions to near surface, and they have their own unique character. Okay, they might have a difference in time too. We don't have a lot of age dates or stuff to say that, but it looks to me like there's probably two reduced magma sources in this area. That's exciting. What does it mean for the project? Well, it's never a bad thing to have twice the potential. It's think of it like the upside down cow, right? These are the udders of the cow reaching up. We have basically two cows upside down, sticking up, coming up close to surface. Okay, that's intriguing. So let's talk about this one on the right, the new area that they found. Go to the next slide. Most of the data that's in the next couple of slides is actually from surface work that was done by the company, as well as geophysics. They have some geophysics, in this case magnetics, which is the bright colors in the background. Notice that the mapped intrusive, which is the pink blob over here on the right, this is at Meiku, I believe it's pronounced. It's a granite intrusion, okay? And we'll look at a photograph of that in a minute, but it's got gold samples that were collected from many, many locations across this thing that are pretty stout. That looks like a really good start to developing a new target in these granites. But then the magnetics, what they're trying to show in the background there is that magnetic low, which is the blue area, seems to be kind of off on its own. Now, I don't know what outcrops and stuff there are to map in that area, but it almost seems that there might be a shallowly buried intrusive in this mix too, and that might be partly driving what we see here. Okay, it might be partly the outcropping intrusion, which is the pink, but then there's clearly something else going on here that's quite intriguing. And notice the gold samples actually extend out into that area, and then even down there to the southwest, they're finding stout gold samples, gold in rock samples. This is looking like a really robust target. It's not been drilled yet, but they're starting to get enough data. They can probably start to think about drill targeting this. Go to the next slide. I think that this slide really illustrates, this difference in flavor. If you look at the drilling and stuff that's been done more over towards Clear Creek, again, you see this, porphyritic texture. You often see that crowded porphyry and things like that. And look, just from what I can see in these rocks, we're looking at more of an equigranular, like a fine grain granite or granodiorite of some sort. Looks different texturally. Those rocks look a bit different, but that said, they still have the sheeted quartz veins. Okay, so in this case, those sheeted veins, which are highlighted in red here, are likely carrying the gold, and I think this looks like a legitimate reduced intrusive target. Just a slight difference from the one to the west, which is the belt to the west, which is probably a different magma source. But this is exciting. Okay, they found They found the second upside down cow right here. All right, let's go to the next slide. And then this is the Matin area, I believe it's pronounced. You can see again a mapped area in pink. That's the granite intrusive. And then along the northern edge, really around the periphery of this thing, you're seeing a gold anomalism both in the soil. So that's the kind of the contoured colored areas in the background there around the edge, and then rock chip samples, some up to what is nearly 12 grams per ton, defining a new area of gold mineralization. I think a little bit more work's probably going to be needed here before they can drill target. But again, we have a reduced intrusion with an auriferous halo around it. Good start. Let's go to the next slide. Okay, now we're going to jump over to Alaska. Silver 47 picked up the Red Mountain project. This is the VMS project that was once owned by White Rock Minerals, and they hit it pretty hard this year. They did quite a bit of drilling. They got some more assays for recent holes. Holes 104, holes 105. This is from the Dry Creek area. Hit some very, very stout intervals, 15.24 meters of 545.5 gram silver equivalent from hole 104, and then down the middle of the box on the right hand side, 105 hit 22.32 meters of 601 gram silver equivalent, and that did include a higher grade interval. Okay, there's up to 2.66 meters of 1,800 gram silver equivalent. Those are encouraging numbers. Now, this project, this resource area, was drilled by White Rock, albeit on wide space drill holes. Okay, so the company Silver 47 has come in and actually been doing some of the infill drilling. Let's go to the next slide and talk about it more. So you can see here some of the historicals, which are the ones in the background with a lighter or thinner black trace. And then the more recent holes with the red trace. And you can see how the more recent holes with the red trace do really pick up on the continuity between the drill holes. It looks like there's a high-grade zone. You can almost snap a line starting near surface and extending down to hole 64. And these two holes, holes 104 and 105, hit some really stout intervals of mineralization, demonstrating that is indeed there. Again, 22.32 meters, 601 gram silver equivalent. I mean, think about it. That's almost 20 ounces. Not quite, 18. I can't do the math in my head, but that's a really, really good interval of mineralization. Okay, so it's nice to see a company coming in and picking up where others left off. I think we'll see the ability for Silver 47 to upgrade the resource over the next year or two as they drill the same in more detail, and quite frankly, that usually leads to a better outcome in terms of grades, confidence, stuff like that. So, very strong results for the first season. Let's go to the next slide. Okay, Hannan Metals. A lot of people email me or contact me in various ways, and they ask, "What's a new story I can look at here?" More and more, I'm looking at Hannan Metals and just pointing people to investigate this further, because I'm not trying to provide advice, but it's just an interesting story. We're invested, obviously, but it's just so compelling that the company has made this amazing discovery in an area that's completely previously unexplored. They've found a very large, potentially large porphyry system that hosts both copper and gold. Okay, so these are probably alkaline porphyries of some sort. They're on the eastern flank of the Andes and in Peru, and it's an area that's never seen any exploration or drilling. So to see a real grassroots discovery like this in this day and age is so encouraging, so refreshing, and I love to see good work done like this. This news release that came out recently talks about the fact they received their DIA. DIA is basically an acronym. Don't know exactly what it stands for, but it's a permit that's needed for drilling in Peru, and Peru's been moving the timelines of these dias quicker and quicker recently. So they're trying to revitalize exploration, and here we go. Hannan's got their dia now. They can start drilling. It does cover a number of drill platforms, so 40 drill platforms, and that allows them to test numerous targets. Okay, so that's really important. And they really have 3 defined belts or target areas developed here. This Ricardo Herrera, Vista Alegre, and Sortilegio, I believe it is, target. I'm probably butchering it, but that's me. All right, go to the next slide. Okay, you can see in this map the land holdings of Hannan. They're basically in the east flank of the Andes. So in that map on the right-hand side, that's kind of the trend of the Andes Mountains in central Peru coming down through there. The mineral claims that are held by others are in gray, and you can see how virtually all of them are focused over there in the west, where mines are traditionally found and developed and stuff. This is kind of in no man's land on the east flank of the Andes. So the red polygons that you see there are the new areas that Hannan is focused. This is exciting stuff to see grassroots exploration like this. This Valiente project is the main focus here. So the one that's to the south there, and this is a porphyry belt, it seems, rather than the project to the north, which is San Martin, which is mainly sedimentary copper focused. All right, let's go to the next slide. I thought I would touch on these targets a little bit in this preso because I think, and look, people can go to their deck, they can read through the materials, they've got several promotional videos and stuff too. I think they're worth watching. But I'll just touch on the quality, what they're seeing out of these targets. In this, I believe it's Belin area is where they got their dia. It's in the black box there on the right-hand side towards the bottom. We can see the 3 target areas. Okay, so those stars, those red stars are where they now have access to drill. What are we looking for? We're looking for porphyries. These are porphyries that host or potentially host copper and gold mineralization. All right, and associated with those porphyries, of course, around the porphyries, we get skarns where the rock gets cooked up, and sometimes the fluids came out of the porphyry and interacted with the adjoining rocks to form mineralization that we call skarn mineralization. All right, so this gives you a sense of the scale of this thing. It's very large property holding. The Previsto area is also quite interesting. I'll touch a little bit on that here in a minute. Let's go to the next slide and talk about. There we go, the geochemistry and stuff that we're seeing. So first of all, 2 areas. You got this Belin area, which is where the 3 targets are. That's in the south, the lower left of this image. And you can see that they have some really well-defined targets based on gold and soil anomalies. Just, crystal clear where the mineralization is likely hiding in this area. Okay, so very clear drill targets. And it's a good thing they have 40 drill platforms because, to test that long swath that's probably about 8 or 10 kilometers long, you're going to need a couple holes in here and there all over the place. And we got a lot of exciting news coming, I think, out of the company to do so. Now, one thing I'm going to point out, this Previsto area to the north, it's not permitted yet. I think it will be. But for whatever reason, I didn't realize that the footprint of gold in soils here was so profound like this. The numbers they're seeing often are in the 0.x gram in gold in soils over a huge area. It's like, almost 5 kilometers wide and 5 kilometers tall. That's 25 square kilometers or so of area that's underlain by strong gold anomalies. That's really interesting. I when I saw the deck updated here, and I might mention this one too. So we're going to talk about these drill targets, but we're also going to talk about Previsto. Okay, go to the next slide. Okay, here you can see a closer image. They've done enough mapping of the geology. They know there's kind of a belt of intrusions here that are probably driving these porphyry systems. And you often see elongation along the Andes. A lot of times things are kind of squeezed, and they form kind of belts that go mainly north-northwest, we'll say. So the porphyries are kind of mushed, we'll say. All right, so we're seeing that kind of pattern. You can see the three targets that we have here and how they're defined by, both gold and soils as well as copper. They have, sortilegio, they have high grade copper, 16%. Think about that in a vein. To sample a brand new area and pick up a rock that has 16% copper, 4.4 gram gold as well. That's almost heard of in this day and age. Okay, so to see such numbers come out of a brand new virgin area, really encouraging. And we're going to see this company drill these targets. Let's go to the next slide, talk about it a bit more. Here you can see some of the data that they've collected from, this is Previsto, from Previsto. Now, this is very technical, what they've thrown out at people, but I think it's also quite important. So we've focused on this Previsto area and some of the geophysical and geochemical expression of this thing. Okay, it does have a magnetic signature, a little bit subdued, but it has a pretty clear magnetic signature over a broad area. So there's clearly a magma or magnetic body driving this system. Now, over here on the right-hand side, 99.9% of people would look at that and go, I have no idea what this means. Okay, what the company has done here is they've taken whole rock samples. So they basically grabbed samples of the intrusions that are in these different areas. Okay, and they've analyzed the chemistry of that. Why would you do that? Because if you analyze the chemistry of the intrusions, you actually get a sense of what type of magma generated these intrusive bodies, these porphyries. And with that comes a great deal of knowledge, because we know based on the chemistry of the intrusions themselves, what types of deposits are potentially viable, what types of systems are likely present. Okay, now on that chart, which shows all of those colored polygons, it looks like a stained glass window. Those are basically different categories of intrusive type that we see out there. And the ones at Belen and the precursor of the plutonic suite at Belen are a little bit lower and distinguished from the ones at Previsto. Okay, so the ones at Previsto are higher. Okay, what does this mean? Well, it means that the ones at Belen are chemically more conducive to host copper gold. Okay, they're somewhat alkaline, meaning there's some alkaline metal in them, but they're what we call kind of calc alkaline more so than Previsto. That means that there's likelihood there's also a bit of copper and gold, kind of a hybrid of the two. And that's encouraging. I mean, that data gives us a lot of information there. But this Previsto box, notice the little oval at the top of the chart there. That's way up into what I would consider relatively extreme alkaline chemistry. Okay. Well, what would that mean? Okay, here's my 2 bits. I think that they have found potentially a very large alkaline gold system. Okay, is it going to have copper? I mean, there might be some. I don't know. Whatever. But I think Previsto is smelling more and more like an alkaline gold system to me. And I think there could be a shot they find something extraordinary here. There's, often gold, like Cripple Creek in Colorado. That's an alkaline system. That's the kind of gold system that I'm seeing potentially a target here out of this chemical data. Very exciting stuff. And I just picked up on their, based on their most recent updated deck, these kind of deep technical presentations like this, most people just kind of flip through it and not pay attention. I love to plow into these things. And when I saw that Previsto data, I'm like, wowza. They might have a very large alkaline gold system. There's a similar system in, not too far to the north in Colombia. Las Colossus is a very large alkaline gold system found by Anglo Gold a few years ago. And we might be seeing something similar here. Virgin discovery of a massive gold system. They don't have the drill permits yet, but this is one to keep an eye on. All right, go to the next slide. Okay, Newfound Gold put out a news release this week on trench data. They opened up a trench at Keats a few months ago. In fact, I think it's even 9 months ago or so, maybe more. They had some initial results from trenching, but what they've done is come back in an infill trench, infill channel, some of the areas that they identified as auriferous. You might think, well, gee, this should be easy, okay, where's the gold? You should be able to walk up and see it. Look, there's a lot of quartz veins in these systems, okay, and some of them have gold, some of them don't have gold. So it's not necessarily immediately apparent when you open up a trench like this which veins are which, and you really have to plow in and get that detailed data to understand it better. And what they've done here is they've put trenches in between previous trenches where they saw gold values to try to get a better definition of the mineralization. And in doing so, they've clearly found the veins with the highest grades. I mean, look at the numbers. Like, I won't read through the numbers. The table on the right-hand side there is simply a table of the trench results, jaw-dropping numbers. Most of them are in the tens or even hundreds, or even a 1,000+ gram gold in a sample. Okay? These are just jaw-dropping numbers. This is similar to Fosterville in its grade and its nature. These are remarkable results. Now, what does it mean? Let's dive into this a little bit more. Go to the next slide. Okay, here you can see a plan view of the Appleton Fault corridor with the Keats zone. What I want you to focus on, the two blue boxes. Okay, so figure 2 is the trench area open up around Keats. They've also now opened up another trench area, which is figure 4 at Iceberg. And we'll talk about that here in a second too. Go to the next slide. Okay, so this image shows you pretty much a complete trench footprint at Keats. And you can see just the whirls and swirls of veining that they have, which are it's kind of in the background there, but the brown colors that you see through there, the kind of brown lacy things, are the quartz veins within the gray sedimentary rocks, the flysch. Okay, and again, some of these veins are high grade, like if they were open when the gold bearing fluids came up, hey, you get high grade. If they weren't accessible, they weren't open when the fluids came up, you probably get lower grades. Okay, so that's the way this works, and you don't really know immediately which is which, so you have to do this detailed channel sampling, and they've done that now, and you can see quite clearly from the contour of colors that they've got here where the gold grades are located. This is really encouraging. Now, one of the first things I'm going to point out is scale. Okay, down here in the lower right is a scale bar. That's 20 meters. Okay, if you kind of mentally transpose that up to the trench there, you can see that the area that includes the higher grade gold, which is kind of the center of the image, is probably about 150 meters long. Okay, and it's probably about 60, 80 meters wide, something like that. Now, that's, you might say, well, that's not huge. It's not huge, but the grades in this are incredible. Okay, so a small tonnage goes a long way, and I'm going to show you something you can kind of mentally reconcile with towards the end of these slides on Newfound. Okay, but let's go in and look at a little more detail of the main target area. Go to the next slide. Here you can see the main gold-rich area. And notice how the veins are kind of folded up, almost like they probably formed and they were relatively hot, and the rocks were relatively ductile, and then they got squeezed and compressed, and then kind of bound up like a knot. Okay, it's almost like all the energy and focus of the system was bound up in this fairly restricted area. But this thing extends. Don't forget, it extends to depth. Think of it like a pipe, okay, that goes down in the ground. that hosts this real high-grade mineralization. Okay, the infill trenching they've done are where you see the closer space lines with the gold assays reported. Again, the numbers, I can't read through them all, but they're just jaw-dropping. I mean, ounce or ounces, even 10 plus ounces per ton, frequently, of gold grades in this part of the system. This is really remarkable. Okay, again, scale bar, 20 meters up there at the top. If you imagine from the lower left up to the upper right, there's probably about 100 and 140 meters maybe of strike along the high grade here. All right. Go to the next slide. This is some of the mineralization they're seeing. Classic epizonal, high grade epizonal gold. In my view, this is exactly what you saw at Fosterville in the early days. If you have any doubt, just Google Fosterville gold. There will be images of gold bearing quartz like this from Fosterville all over the internet. This is the absolute spitting image of high grade from Fosterville. Very, very compelling. Go to the next slide. And then this is the iceberg trench. Okay, this is the trench they've opened up. They don't have detailed sampling yet. The numbers that you see there are actually drill holes, near surface drill holes that have gone down, I think, and they've also demonstrated good gold results. But we're going to have to wait a little while to get the full data out of the iceberg trench. All right, go to the next slide. Now, I've talked about this before. Everybody knows I love to compare ore deposits to various food types. In this case, I've talked about the fact that these high-grade systems are like a sandwich wrap, a burrito, whatever. Okay, if you can imagine all of that stuff inside the sandwich wrap there, you got lettuce and stuff. That's a sedimentary rock, but focus on the turkey or whatever that is. Okay, that's the high grade. Okay, and almost just like you see in the trench at Keats, there's a pattern to it, and it's a bit folded and contorted and what. Hey, you know what? That's the way these systems are by nature. That's almost every single epizonal system I've seen. The gold comes up in these zones of what I call them zones of structural focus. Okay, or structural deformation. They're basically places where, for whatever reason, Mother Nature focused all its energy and created, cracks and openings through which fluids could ascend from great depth. These orogenic systems go down a long way, and it basically pumped gold-rich fluids up into this area, deposited the gold, the quartz along with it, and you end up with these kind of very focused areas. And at Newfound, they got multiple burritos, we'll say, along strike. Each one of these things is its own sandwich wrap. And they project down into the ground. They're going to project down into the ground a long, long way. Okay, so what are we seeing at surface at Keys? Basically what you see right there. Okay, it's a very focused area, a lot of structures, a lot of high grade. If you can think about that mentally and then think about the third dimension extending down into the ground, that's the way to think about these systems. Where else have we seen a system like this? Go to the next slide. Well, this is Fosterville. Okay, so this is one of the early cross-sectional views. Now, bear in mind, Fosterville was a mine when they found the high grade. They were mining the lower grade refractory ores for many years, like 20 years or something. And as they were mining down, they got into the top of one of those burritos. Okay, and that became the super high grade mineralization that made Fosterville so famous. You can see in this image the structures. Again, think of that burrito. Again, think of that sandwich wrap. And the pink and the red are the high grades that are within that zone of deformation, that zone of focus deformation, that zone of focus structure. So if you think about that, and you can imagine that thing in the third dimension, it didn't extend down plunge hundreds of meters, I think 800 meters in the case of Fosterville. That's the kind of thing we're dealing with. Now look at the scale, okay, down here at the bottom. That's about 100 meters, okay? So if you want to kind of mentally make the leap between what they're seeing at Newfound and what they're seeing at Fosterville, that section right there, which is a cross-sectional view, it's not a plan view, it's a cross-sectional view, but it's showing the same thing. Similar scale. Okay, the high grade at Fosterville, more or less all of it falls within a burrito about 100, 120, 140 meters across. So you think they could have a similar deposit at Newfound? My view is yes. I think we're looking at something very similar. Okay, I know that everybody loves to see instantaneous resource numbers and stuff like that, but you have to get the detail. Now, one thing at Fosterville they realized, they ended up drilling Fosterville at, I think, nominal 8-meter spacing or something to get the reserve definition that they needed. That is one of the critical issues with high grade systems like this. You got to have just incredibly high density of drilling because there's so many quartz veins and other things. You kind of got to sort out the wheat from the chaff to figure out what your resource or reserves are. Are they there yet at Newfound? No, they've got a ways to go, but this trenching that they've done helps tremendously because it gives you that definition. Okay, now they know, okay, here we've got these high grade structures within their burrito, and they can start to piece that together down plunge. I think it's a very important step. Okay, let's go to the next slide. Kingfisher put out news about picking up more land. I'll tell you that when Dustin gets going, there is no stopping the lad. He has been a busy guy, building up a tremendous land position up in the northern part of the Golden Triangle. This happens to be in an area that's not too far from Highway 37, which is kind of unique in this day and age that you can have reasonable access. But he has built up yet another piece of land he calls the Ball Creek West Project. Okay, let's see what he's added. Go to the next slide. Okay, this map here actually, I think, is hugely illustrative, and I didn't realize how closely intertwined the land parcels are here. But this shows Kingfisher's land in the light bluish gray, and it shows the new tenure in the middle of the map there. That's at Ball Creek West property, which bolts directly onto the consolidated Highway 37 project. But it also shows how closely it fits in with, guess what, Galore Creek and Tex Shaft Creek area. Okay, so the darker black and the grays are big mining companies. You got Newmont in joint venture with Teck down at Galore Creek, and we got Teck on their own, and then off to the northeast, you can just see a little bit of Newmont poking in there too. So we're right in the thick of where there are a number of very large copper gold projects already being advanced by big companies. Okay, this is a good strategy. I think this is a killer strategy. Somehow he's managed to muscle in here and stealthily acquire some very strategic ground in the midst of what are probably much more extensive copper gold systems. All right, let's go to the next slide. Let's talk about some of this data that he got with this acquisition at Ball Creek West. You can see here there is quite a bit of surface sampling, rock chip sampling, as well as copper and soils. Huge footprint here of copper anomalism, as well as really strong. I mean, look at that, over percent level copper in many of the samples, especially in the northern area. That looks really intriguing. Okay, not ready for drilling just yet. Probably more work needs to be done to bolster the targets. But wow, that's a sizable footprint of copper anomalism. Look at the scale bar, 1 kilometer. You know, you start imagining in a 1 square kilometer area, which is in its own right, like that would be a respectable scale for a porphyry. You can imagine fitting several of those in here. Okay, so this is a very high quality target rich area. Go to the next slide. There's so that's Northmore, and then this is Mess Creek and Hickam targets. This is on the far west, over there more towards Galore Creek and Shaft Creek. So we've got, once again, strong copper anomalism, very good gold numbers as well in places here too. Just absolutely impressed that he was able to pull this land together. I think he's going to have, this probably adds about another 6 targets to his already well-defined 6 targets he announced a couple of weeks ago. This is looking really good. Good on him. I'm thinking this too, like Hannan, relatively new area, new concepts. that might be a real hot story here in the not too distant future. Let's go to the next slide. Cantex put out some news from their drilling this year. They did quite a bit of drilling up in the Yukon on their. It's in the Rackla district. Okay, so this is kind of east central Yukon, and it's kind of in the middle of the country that you would also see the reduced intrusions. By the way, so Snowline and Sitka, but we are looking at mineralization that's lead, zinc, and silver in this case, including germanium, which they found very high grades here. What is it? Well, when I first looked at this, I talked about it to the audience here, and I said, I was thinking it was probably like a Howard's Pass type deposit, or one of the classic McMillan Pass type things, or whatever that we know about in the Yukon. And those are interesting deposits. They have their challenges. Mainly, they're so fine grained that metallurgically they're a bit of a challenge to grind up and extract the metals, but when I looked at Cantex's core and stuff, I realized this is a bit of a different beast. Okay, the sulfide minerals were very coarse grained, and the rocks that host this are quite a bit older than the rocks that we see in those other well-known deposits. And then it kind of clicked with me. I'm like, okay, this is a SEDEX system, but it's in the older rock package, and it's probably more like something we see in Australia, like Broken Hill or something like that. Okay, so very coarse sulfides in places and very high grades. And they've once again demonstrated that the system can generate remarkably high grades of these important metals. Go to the next slide. We'll talk. And then when Cantex puts a news release out, I'm going to be a bit critical here, but they don't give you a lot of meat to work with. And that's one complaint I will throw out there. I would love to see more cross sections, more fully thought out presentation of the data that they get. Fine, they put the table out there with the assays and stuff, but I want sections. Okay, but just looking at the results here, they have some very good numbers, high grade, in some cases somewhat short, but we're talking like 20+% combined zinc lead in several assays here. That's amazing. Okay, those are really strong grades for a SEDEX system. To me, that speaks volumes about the strength of the system and the likelihood this is going to be a big discovery. There is considerable silver, 2-ounce silverish, which for a SEDEX system is not bad. Okay, that's actually a pretty good result. They don't have their germanium numbers just yet for these assays. But my hunch would be we'll see similar results to what they've seen in the past. Maybe a few hundred, 200, 300, 400 ppm germanium as well. Okay, let's go to the next slide. Okay, the important takeaway. This is the one map they did provide. The important takeaway here is that they've done more drilling. In this case, off to the east, so they've extended the sulfide mineralization a little bit further to the east. It's about 300 meters additional strike in that area where you see the green dots. Those are the drill holes that are in this news release. And then the brownish footprints that you see there are the sulfide mineral blobs that you see. And they're starting to connect, okay? I wouldn't be surprised if more drilling starts to connect the polka dots there. And we see the system grow. Okay, so now we're starting to see something, we'll say, that has a real scale. This main zone maybe has about 2.5 kilometers strike length of sulfides, including high grades. That's starting to look like, it has the chutzpah, the potential to be a real significant base metal discovery. And that's what you'd need to see in this kind of country. This is fairly remote, so you're going to have to see something that's got some legs to it. But good start, good results. They're starting to see extensions. I really want to see this tackled more aggressively. Maybe Cantex will find a bigger partner to come in and work with. All right, let's go to the next slide. Line 1 put out an update on their financial results for the third quarter. I think you're going to see the company take this approach more and more. They've also announced that they've drawn an additional $4 million on their Nebari financing facility, which is good because they need to keep advancing this project. I think if I had to sum up all the results here, great. They had record revenue, a little over 10 million Canadian, 3,100 ounces gold, and a bit of silver. Are they at full speed? Are they gung? No, this is still. I'm going to call it a test scale mine, but they're ramping up. Okay, the takeaways that I see are they're seeing continued improvement in gold production and consistency. They're trying to get their dilution down, which in turn would mean higher grade. So I think we're going to see the grade hopefully start to rise. Right now, it's a little less than 5 grams, but they're seeing the tonnage increase. They're seeing the amount of waste they've moved. And look, in the development stage like this, you have to move a lot of waste because you got to keep developing, especially the ramp that goes down to the high grade. So I would say the company is in growth phase, but on the right trajectory, from what I can see. Okay, this is encouraging. I know a lot of people want instant gratification, but I think that we're seeing a continual ramp up, and I would hope to see the company reach its goal of, say, 600-700 tons per day of production. If it does, and they keep the dilution lower and the corresponding grade comes up, I think this could be a very, very successful mine. Okay, so they're getting there, and they have the money, the backing to do it. Next slide, please. Okay, here we have a news release by Puma. They did strike that deal with Kinross recently, where Kinross is basically earning and optioning to earn in on the Williams Brook project, which I think is a great move. Okay, by the way, to have a backing like that is super strong. But bear in mind that Kinross has basically said, hey, you guys keep operating the project, you keep doing your work, and we'll simply support you. So it's kind of a unique situation where it's not like Kinross is throwing, scads of their own people into the mix here. They're basically saying, okay, we would like to earn in here, but we're going to have you operate the project. And so Marcel and his team had some good results this week. Go to the next slide. In this Lion area, which is one of the more recent discoveries they made. And, Marcel's approach is to open up, because of the cover and stuff, the nature of the targets here, a lot of glacial till and stuff. He likes to open up areas and get in and sample. And in this Lion area, look at this. You generate some very, very strong gold results, gold at surface. Are they necessarily representative? No, but, when you start to see quartz veins over and over and over again in all of these targets, generate numbers like this, you got to take note. Okay, it's basically a taste of what might be to come. In many senses, this is like Newfound. Okay, it's a very similar geology, similar story, and it will probably unfold in a similar way. But very good surface rock chip samples. I think that might be it, guys. Let's go to the next slide. If that's it. Oh, yeah. Well, we're back to the first one. Okay. Really appreciate everybody listening. I'll turn it over to Kevin and Tavi. Thank you.
All right. So you heard from Tavi today. You've heard from Quinton. Sorry you didn't get much of me today, but we had a lot to digest there. So, look, I am really excited about what Quinton was talking about in terms of the potential inflection point here, and I have a lot of reasons to believe that that's possible. Some of the things that Tavi was talking about with Scott Bessent and a lot of the ideas that the Trump administration have, with Scott Bessent to, we think there is a plan to, to move to what he calls a Bretton Woods realignment. And I would encourage you to go dig a little bit more into that and watch some Scott Bessent videos. Listen to some of his interviews and really pay attention to the some of the policy ideas that he has, because I think Trump has bought into it hook, line, and sinker, and this is what the new administration is going to be going for, and it does involve a listen to Scott Bessent tell you he runs a macro hedge fund, and his largest position is gold. So listen to what he says about cryptocurrencies too. He says cryptocurrency is a risk on asset. Gold acts as both a risk on and a risk off asset. So, there's a lot more meat to the different policies that he's been talking about. We think he's also taken advice from Zoltan Pozar behind the scenes, who has some really incredible ideas for the. He comes from the Fed and has worked for the Treasury. He's the guy credited with really understanding the plumbing of the shadow banking system. And so anyway, we think the outlook for precious metals is looking really bright in the future here, in the near future. And what Quinton was talking about, how the exploration stocks, in particular the junior mining companies that have been so starved for capital here for the last few years or longer, we think there's an inflection point coming where you're going to see a lot more capital flowing into this industry, and we have an incredible portfolio of big high grade gold, silver, copper discoveries that we have been building over the last 4 years. We think it's extraordinarily undervalued and has a lot of upside potential ahead, and we encourage you to find out more. If you're interested, we got Merrick here you can reach out to. Here's his phone number and his email address. Anyway, Tavi, any concluding comments from you?
No, I talked too much already. So I'll suggest everybody to stay tuned, and we're going to have a letter out tomorrow morning probably. And you can read more of her thoughts regarding that dollar idea that really, I think, is a cornerstone for not only for the global economy, but really it could be very impactful for markets as we move along here. So that's why we're giving so much relevance to the potential moves on the DXY index, but also the dollar itself versus other fiat currencies, as it tends to really trigger a lot of these other ideas that are all kind of linked to the gold trend, to the mining trend, to emerging markets trend, and others. But nonetheless, stay tuned. If you have any questions, you would like to learn more about what we do and how we are expressing our views regarding all this that we talked about, I suggest you follow Kevin's advice and talk to Merrick. He will be great at sharing more about the funds and what exactly the vehicles that we have, and what exactly what we do. So if you're interested, please contact him. Please follow our YouTube channel as well, so that way you can get notified of our upcoming videos. And we'll be back, and we're doing this every 2 weeks now. So we'll be back not next week, but the following one. All right. Well, thanks everybody. Have a good one. Take care.